Very good morning, everyone. I hope you all are fine, doing good. Audio, video, all set? Just let me know quickly. Audio, video, good? All right. So, welcome back again in this RBI Annual Report analysis. Today we will complete this report. Only a little portion is left, which we will be taking up today. Okay. So, as I told you that in the second chapter of the report, there is unnecessary repetition of facts and the discussions, the theories which we have already done. So, we don't want to repeat those things which we have completed in a very better way. Okay. So, as to save your time as well as efforts. For that section, we can also have MCQs of RBI report. We will have MCQs as well, so that you get to prepare it in a more wholesome manner. Alright, so let's begin with the analysis. Yesterday, we were discussing the regulatory and supervisory measures for 24-25. What have been the regulatory framework or new initiatives, for example, launched by RBI, to supervise more efficiently, to have more regulation and prudent supervision of the entire banking system or financial system, right? So, we were discussing the regulatory and supervisory measures. In regulatory measures, we have discussed already in yesterday's class the comprehensive review of extant RACP. Yesterday only I have in detail I have told you what is IRACP, right? Income recognition, asset classification and provisioning norms. We have seen this topic in a much detail, right? So, yesterday we have completed this. Then harmonized prudential guidelines for all regulated entities. We have seen this. Review of regulatory instructions on interest rates and advances, that they will review time to time the regulatory instructions which are there related to what interest rate you can charge, what are the type of advances, what are your asset quality, all these things, right? So, we have seen so far till this point in yesterday's class. Today we have to take up from here adoption of forward-looking expected credit loss approach. So, RBI has been focusing upon this. So, in the regulatory framework, if you see, expected credit loss approach is being more emphasized upon. What is expected credit loss approach? As the name suggests, it is a forward-looking approach. Forward-looking approach. It is a forward-looking approach. What is forward-looking approach? So, basically, it tries to estimate what the expected losses can be, right? So, as to mitigate those crises, those losses with prudential norms and regulatory guidelines, rather than, as you know, prevention is always better than cure, right? So, preventing such kind of activity, expecting what losses are you expecting, so as to mitigate the chances of any loss, any crisis in the system. Are you able to understand that, right? So, remember this, that in the regulatory framework, RBI has been emphasizing upon expected credit loss approach. Expected credit loss approach, so as to estimate any chances of future losses accruing out of any risk, say interest rate risks or any banking book risk, okay? So, what can be the losses to your capital, to your assets, to your loans? So, expected credit loss approach is being emphasized. Next, issuance of securitization of stressed assets framework. Will you please let me know, when we talk about the securitization, which act comes into your mind? We have taken up an entire editorial in regarding this thing. Let me know quickly. I hope you will be able to answer that, right? Yes, securitization, which act comes to your mind when we talk about securitization? SARFAESI, very good, right? So, in editorial classes, we have discussed SARFAESI, securitization of assets and securitization and reconstruction of financial assets, right? So, an enforcement of interest act. So, this act, was launched and there are asset reconstruction companies which work like a bad bank. So, they purchase the bad assets from the bank and try to recover it. We have discussed all these mechanisms, right? So, more emphasis on securitization of stressed assets. Stressed assets are your NPA. Stressed assets are those loans which are not performing well there are chances of default or they have been defaulting, right? So their securitization, their recovery, all these process has to be more improved. So they will issue further framework for securitization of assets apart from ARCs, which we have. Next, efforts to enhance awareness, build capacity and foster collaboration among stakeholders to tackle climate change challenges in the financial system. Yesterday also we have discussed that banking system is now also prone to climate risks. You know very well why? Because climate risk does not translate into only food inflation, does not translate only into say drought, into say heavy rainfall or less rainfall. It also translates into fluctuating interest rates, isn't it? So if there is due to any climate shock, if there is agricultural supply getting affected, in that case your supply chain gets disrupted and it causes supply chain inflation, supply side inflation. And that to tackle that inflation, central bank tries to keep the interest rates higher. So it can lead to abrupt changes. It can lead to abrupt changes in the interest rates that can lead to risk in the financial assets. So this is how you need to have climate change related mitigation framework as well for the banking system. So it is also not immune to climate risk. It is very much vulnerable. You should remember that, right? Yesterday also we have discussed this point. Next, if we talk about the supervisory initiatives, now we have seen the regulatory, now the supervisory initiatives. So RBI focuses on early risk identification. That would be better. If you are able to identify the risk earlier, you will be able to mitigate it rather than curing it later on, right? And then after it has spillover effects. So early identification. Next, focus on identifying risk and vulnerabilities early. Again, same point. Increased focus on root causes of vulnerabilities. What are the root causes of these defaults, these crises, these losses, if any, right? Harmonization of supervisory rigor across the financial system. Also, there is another thing that this supervisory framework should be harmonized across financial system. Supervisory mechanism should have harmonized mechanism. So every regulator, every regulated entity, every supervisor and every supervised entity should be in a harmony with each other. The mechanism should be like this, right? That there is proper coordination among them all so as to have a proper supervised and regulated mechanism and framework and system. Next, frequent interactions with supervised entities to enhance supervisory effectiveness. All your supervised entities, they can be bank, NBFCs, right? Any other supervised entity for that matter, any financial institute, any other financial entity, you should be in regular interaction, proper interaction with them so as to improve the efficiency of your supervision. Then priority on strengthening governance and assurance functions of supervisory entity. Now here is one word which you need to understand, assurance function. So there should be priority on improving the governance of these supervised entity as well as assurance function. What is assurance function? Any idea? So assurance function, generally includes your risk management, then compliance function, internal audit, etc. So assurance function means that you should have proper compliance framework, proper risk management framework, proper internal audit so as to prevent your system, your entity from getting into corrective function. So if you work properly upon your assurance function, you are complying with all the norms, you have proper internal audits, you have proper risk management norms, you will not be needed to be placed in a corrective framework. RBI will not require to correct you, isn't it? So assurance function should be proper. These are your assurance functions. Okay. Now, supervisory action framework. So basically, the PCA framework, as we have seen, I have told you what is PCA framework, right? You remember the hospital example which I gave you, right? So if someone is ill, for example, the hospital admits him or her, then after the recovery of that person, he or she is discharged. Similarly, prompt corrective action. So see, assurance function, if you default on your assurance function, then you need to be placed under corrective function or corrective action, right? So similarly, consider it like this, that RBI is that hospital and there is bank, which is the ill person, not well, gets admitted to RBI, okay, or gets admitted to the PCA framework. There are corrections going on, and then it is discharged after being healthy, okay. So this is the thing. Yes. So prompt corrective action is like that, okay. We have discussed PCA earlier as well. I hope you remember that example. I just repeated it once again. So revised PCA framework. Here you see RBI is focusing on revising the PCA framework now, so as to meet the concurrent needs for urban cooperative banks as well. So not only for banks and NBFCs, for UCBs as well. Okay. Then aims for timely supervisory intervention and remedial measures. There should be timely supervisory intervention and remedial measure. Timely. If you observe, RBI is now focusing on early risk identification, to say in one word, if we want to sum up, right? Why? Because once you incur the loss, then cleaning out the spillover effects becomes very difficult, okay. So rather than curing the problem, you need to focus on the prevention, right? Recognizing the importance of assurance functions. Again, same as I told you, assurance, compliance with the guidelines, with the norms, risk management, proper internal audits and all, in ensuring early identification of vulnerabilities and initiating corrective action. So if you default on your assurance function, then you need corrective action, you need to be corrected, right? So if there are any vulnerabilities, then they should be early, timely placed into corrective framework. The harmonization of guidelines on assurance function applicable to scheduled commercial banks, urban cooperative banks and NBFCs is being examined to further enhance the effectiveness. So this is all about the regulatory and supervisory framework that the RBI is primarily focusing upon, early identification of the risk, trying to harmonize the supervisory guidelines between all these entities, not leaving even a single segment unregulated or not properly regulated. So encompassing your scheduled commercial banks, urban cooperative banks, NBFCs, everything, right? Proper regulatory framework is now being expanded. Also for UCB's PCA framework is being re-examined to include UCBs. Understood so far, right? So this was the regulatory framework being talked about in the report. You just remember in one word, early identification of vulnerabilities or any problem with the assurance function, then you need to be placed in the corrective function, as I told you, right? Just one line you can remember the entire regulatory framework, which is the report is focusing upon, okay? Now, second, digital currency and payment system. We have already seen the central bank digital currency in detail in the earlier classes of RBI report. So, as you know, e-retail and e-wholesale. What is the difference between e-retail and e-wholesale of digital currency, as I told you? Do you remember? What is the difference? E-retail and e-wholesale, e-rupee retail and e-rupee wholesale. So retail is for general purposes, anyone can use that, okay, but wholesale will be used for specific by specific or specified financial entities, right? If you remember the difference, we have discussed this thing. So wholesale e-rupee would be for specified institutes, yes, and retail would be for general public and general institutions. Wholesale would be specified by the RBI, okay. So digital currency and payment systems, if we talk about, so expansion, we are continuously focusing upon expansion of digital currency. In 24-25 we are looking towards expansion of this pilot with new use cases, designs, technologies and participants. We want new technology, new uses, new design in this pilot project further. Okay, next, launch of full-scale public tech platform with financial institutions and data service providers. Also, Also, the RBI is planning to launch a full-scale public tech platform. RBI is planning to launch full-scale public tech platform for this digital currency, okay, with financial institutions and data service providers, so that the buying and selling and the entire process of this digital currency can become more inclusive and more transparent, more digital, more accessible. So it is planning to have a public tech platform for that as well, okay, right. Now, payments vision. What is the vision regarding payment system of RBI in 2025? So you know, online payments continuously spreading their reach, right? Focus on customer centricity, innovation and expansion. Customer centric payments, making payments on the part of customer more easier, more user friendly, right? Next, extension of central payments fraud information registry. Yes, so you know about this registry. There is a registry, Central Payments Fraud Information Registry, CPFIR. So this is a central registry where your financial institutions, you know, banks and other financial institutions, NBFCs, they can register, they can inform of a fraud that can be national, domestic or international as well. Okay, so what is this Central Payments Fraud Information Registry? As the name suggests, it is a registry, a record of fraud related information, whichever frauds are there in the transactions or payment system. That can be complaint of domestic fraud or international fraud as well, remember, right? So you have this registry, so the RBI knows what is going on, what are the frauds which are going on, right? So this is important. So here the news is that this registry's access is now being extended to local area banks as well. Earlier it was, you know, only for banks, scheduled commercial banks and all these entities, but now they are being extended to local area banks, state cooperative banks, district cooperative banks, regional rural banks and non-scheduled urban commercial, urban cooperative banks as well. Okay, non-scheduled urban cooperative banks as well. Okay, so understood what is this Central Payments Fraud Registry, right? Here these entities can register for any fraud if they notice in the payment system. Simple. Okay, this is a step towards more transparency in the financial and payment settlement system, isn't it? Right? Next, risk-based authentication mechanism as an alternative SMS-based OTP, one-time password, as you all know, for additional factor of authentication AFA would be effectuated to address risk in payments. Now this is very important. You know, till now when you initiate a transaction via say net banking or debit card, credit card, you get an OTP, isn't it? One-time password. Now OTP is something which was not specified by the RBI to be used in particular. Remember, OTP was not something which RBI pioneered to be implemented. No, it generally came into use. Are you getting my point? So it became popular as a popular factor of authentication. It became a popular factor of authentication. What is this? Factor of authentication, security credential. Okay, so it automatically became a factor of authentication, a security credential which is now widely used by the banks and financial institutions for settling up the payments, for identifying the security of the payment, identifying your identity for the payment. Right. So now the RBI is trying to expand this, to shift from OTP based to some other factor of authentication, some other security credential. Let's see what it rolls out, right? So has to have proper risk management in this payment system. So that would include your risk based authentication. Whatever risks are involved in that transaction, in that payment, would be taken into consideration. So RBI is planning to introduce an additional factor of authentication, some additional security credential apart from OTP. so as to have proper risk management in the payment system. Okay, so have you understood this? What is factor of authentication? Factor of authentication is any security credential like OTP being used to verify the original identity of the payment or the origin of the payment, right? Understood. So this is another important news. Let's see what RBI comes up with, right, in future course of time. Also, exploration of fast payment system interlinkages with European Union and South Asian Association of Regional Cooperation. We are also trying to interlink these fast payment systems, like online payments. So, with the EU as well as the ASEAN. With the EU and the ASEAN. Yes. Okay. So, this is the thing. We are trying to enhance our payment interlinkages, these online payment interlinkages, fast payment interlinkages with these markets, because they are huge markets, EU, very huge market. ASEAN, Association of Southeast Asian Nations, very huge market. So, we are trying to expand our interlinkages with them as well. You should remember this point. Okay. Now, moving ahead, if we talk about the digital payment system, so again in digital payments, it would be shaped through the pillars of integrity. So this is theoretical part, there is no conceptual thing. That's why I'm saying that in the part 2 of the report, there is this thing like only continuous repetition of the same points. Okay, so that's why we have finalized the important content for you only. We would not repeat the same points, same facts, right? So, as you know, digital payments, RBI focuses now that the digital payment system in India would be standing on these pillars. Which pillars are there? Integrity. What is integrity? Tell me quickly. What is the difference between honesty and integrity? Can anyone let me know? What is the difference between honesty and integrity? Difference between honesty and integrity. Anyone? So there is very recent news related to integrity. The NET UGC exam, UGC conducts the NET exam, right? NET JRF. So has been integrity in that exam has been compromised, so the exam stands cancelled, which was just held on 18th June. So there is a recent news related to integrity. What is this integrity? We have strong morals, but then what is the difference between honesty? Isn't honesty the most ideal virtue which you can have? What is the difference between honesty and integrity? Honesty being true to the world, integrity means true to yourself, inner self and conscience. Very good attempt. Honesty is being truthful. Okay, so very good. You are very close to the answer, but still let me tell you the answer. Honesty is your moral, of course. You have high values, you don't lie, that is honesty. But when you practice honesty into your work, so having honesty in your mind, having good thoughts about honesty, having morals related to honesty is something honesty, okay? But when you implement that, when honesty is reflected into your actions are not decoupled with honesty, they are coupled along with honesty, that translates into integrity. Each and every action of yours is in alignment with the moral of honesty, that translates into integrity. Okay? Yes. So, this is the thing. Understood? This is what integrity is. This is the relation between honesty and... So, integrity is the implementation of honesty into your day-to-day life, into your actions. So, when your thoughts related to honesty meet your action, that's how it becomes integrity. So, we want the digital payments to have integrity, transparent, okay? At each and every step. Then inclusion, everyone should be included. No strata of the society should be sidelined. Then innovation, of course, we cannot grow without innovation in any sphere, be it digital payments or be it any sector. Institutionalization, more formalization of this, more institutionalization of this. less spillovers, less leakages. We have proper institutional mechanism for all the digital payments we should have. Okay. So then internationalization as well. Internationalization of digital payments. We want our digital payment system to be integrated with the developed markets, recently as we have discussed with that of the European Union and the ASEAN and other markets. So this is the focus of RBI regarding digital payments. I hope you have understood. Also the report says that knowledge sharing on digital public infrastructure with other emerging nations. Now this is a very important term. We want to share knowledge regarding digital public infrastructure with all over the world or with the other emerging markets. Why? What is this digital public infrastructure? DPI. Most important thing right now which you have, or I can say this is the umbrella term for any digital thing which you can think of. Why am I saying that? So you think of governance being provided digitally, includes DPI. Oh, it is included in DPI. You think of identity card being accessible to public online, part of DPI. Okay. You think of government schemes, benefits being taken by the public via online platforms, part of DPI. Innovations, R&D, financial transactions, everything. So digital public infrastructure encompasses all these public facilities, It is a cloud of all these facilities. It is that platform. It is the digital place where you can access all these facilities, right? So have you understood what is digital public infrastructure? For example, you want to have your identification being cross-checked for say visa, for passport. You have online access to your documents. That is digital public infrastructure. All these things. So we want. Have you understood what is digital public infrastructure? I hope, right? So we want to share this knowledge in the emerging nations. Why emerging nations? Because this is key public infrastructure, also known as key public infrastructure for emerging nations. It provides you better governance opportunities. It provides lesser leakages, lesser exclusion error, more inclusion of people which are to be there, more financial inclusion. Right? So it needs to be shared with the emerging nations. They can also get benefit out of it. Knowledge sharing regarding digital public infrastructure. Understood? Right? So this is the thing. Then initiatives like cloud facility, again very, very important. I think you should remember this fact clearly. It can be directly asked as well. Cloud facility for the Indian financial sector and fintech repository. You should have, these words are used interchangeably, yes, but you should have clarity of each and every word, right? What is integrity, what is honesty? If two words are written separately, they have a difference. We cannot just ignore the difference, right? Okay, so it's good you are noticing these points. That means you are focused. So I appreciate that, okay? Now, what was I telling you is the cloud facility. So remember this, I am telling you very important fact it is. RBI is planning to create a cloud facility, where every data can be stored regarding the Indian financial sector. For the entire Indian financial sector, it will be a cloud facility with secured system, very high security, because it will be under RBI. It is the last class of RBI Annual Report today, okay, no worries. So this cloud facility is initially, as the plan is, it will be initially operated by IFTAs. It will be initially operated by this IFTAs, Indian Financial Technology and Allied Services. Indian Financial Technology and Allied Services. This is only, okay. So Indian Financial Technology and Allied Services. What is this? IFTAs, it is wholly owned subsidiary of RBI only. So this cloud facility will be operated by IFTAS initially, then it will be transferred to some other entity. This is the plan. Okay. So RBI is to roll out this cloud facility under IFTAS, which is wholly owned subsidiary of RBI. Also fintech repository, any data related to financial technology. Okay. Fintech repository as well. So remember this thing, cloud facility plan is that initially it will be operated by IFTAS, Indian Financial Technology and Allied Services. Okay. And fintech repository, so RBI is planning to do these initiatives or launch these initiatives very soon, are expected to enhance operational efficiency, reduce complexity and promote financial innovations, of course. So they will improve transparency, accessibility, operational facility, more financial inclusion, more financial innovations. So all these things. Remember this cloud facility and IFTAS, Indian Financial Technology and Allied Services. This cloud facility will be operated by IFTAS, which is wholly owned subsidiary of RBI. Okay. Now, if we talk about the banking services, so in banking services, RBI is focusing on ensuring availability across all sections of society. So banking penetration basically. Every section of the society should have access to banks branches, isn't it? Then strengthening credit delivery for agriculture and micro, small, medium enterprises. As you all know, government, RBI, NABARD, everyone clearly focusing upon the MSME sector. Credit availability should be there for MSME sector. Review priority sector lending guidelines. You know, there are several guidelines relating to priority sector lending, also for small finance banks and all these institutions. So what is priority sector lending? Priority sector lending, you know, there are certain priority areas like healthcare, agriculture, educational areas, MSME, which are lagging behind in credit access in development. So government wants these areas to have priority, or banks to have, the lending institutions to have priority lending to these areas, so that they can have easy access to credit. That will be reviewed further. Next, formulate the next iteration of national strategy for financial inclusion. Whatever the strategy of financial inclusion is going on, we need to have a next plan for financial inclusion, which will encompass the time period of 5 years, that is say from 2025 to 2030. A more, better, effective, innovative financial inclusion plan. So let's see how RBI makes this plan. Okay. Next, customer protection and grievance redressal. Of course, so you have this ombudsman scheme of RBI, as you know, where you can go with your grievances related to banking system or financial system, right? So for ensuring public confidence in the financial system, to protect the interest of the customers of all your regulated entities, Reserve Bank would focus on embedding AI, artificial intelligence and other related tools in complaint management system. So RBI is planning to include AI and other innovative tools in complaint management system, all these schemes which you have, ombudsman scheme, right, to have more effective complaint management system. When you have more effective complaint management system, public confidence will boost in your banking system, and once public has confidence in banking system, they will automatically get connected to your banking channels, right? So this is the plan. To facilitate lodging of complaints with ease, so that they can easily file the complaint and ensure greater consistency in decision making process, and then that they can be delivered with the proper judgment or proper compensation for whatever their complaint was. So again, combining technology, AI, with the complaint management system, isn't it? Next, internal grievance redressal framework would be further strengthened to encourage banks to take proactive measures to improve customer service. The internal grievance mechanism will also be improved so that banks can deal more efficiently with the grievances of their customers. So RBI is not focusing only upon the banking system's authenticity, their proper functioning, their liquidity. It is focusing on them. Along with them, it is also focusing on the customer services, on grievance redressal of the customers. So we are trying to have to increase public confidence, public trust in the banking system. And remember, banking system works on public trust. We keep our deposit with the banks because we have trust on them. And when the public loses trust in the banks, there is a situation of run on bank. Everyone goes to the bank at the same time to withdraw their money, and bank, does not have your money because it has lended it out to someone else, right? So banking system works on trust. Improving trust would include, would increase your financial inclusion as well, okay? So this is the thing regarding customer protection. Remember, RBI is also combining AI and other innovative tools with customer complaint management system, okay? Then RBI's 90th anniversary, and as you know, when was RBI established? So it was established by RBI Act 1934, okay, 34. So if you see from 34 at 90 years, so this was RBI's 90th anniversary. This was RBI's 90th anniversary. So the report says, on RBI's 90th anniversary, what are our future focuses, right? So 90th year commemoration on 1st April 2024. Continued commitment to developing an efficient and robust financial system. We are very much focusing on developing a robust financial system, RBI says. Then adoption of global best practices. Whatever best practices are there, not only at the national level, whatever best practices are going on the global level, regarding regulation, supervision and monetary policy. So we should have best monetary policy, best regulatory framework, best supervisory action for Indian financial system. Reserve Bank would continue to endeavor to proactively take appropriate measures in best interest of the economy. Whatever the best measures, proactive actions would be required for serving the interest of the economy at best, that would be taken by RBI to ensure a stable and strong financial system while being mindful of the risk stemming from the evolving technology. So at one point we are trying to have a strong financial system, combining technology with it. At the same time, we also are very watchful of all the risks which are involved, which come along with technology. So we are not ignoring that, okay? Innovations, business practices and growing complexities in the financial sector, because if your financial sector grows, risks also grow, right? When you grow, you have risk, and you have risk, then only you grow. If you are only in your comfort zone, you cannot grow, right? So growth and risk are they go with each other. They are like the Vikram Betal, okay? Not living each other's company, okay? So in life as well, this mantra holds true. If you want to grow in life, you have to take risk. If you compromise on the risk, you will be stable, but you will be in your comfort zone. Of course, higher the risk, higher the return. What happens? If you take risk, either you rise or you fall. But at least there is a chance of rising. But if you don't take risk, you are in your comfort zone, you don't have any chance to grow. When you fall, it's not failure. Remember, I don't know the sports person, but there is this famous sports person, I think a famous footballer, who said this. I don't remember the name, but I remember the context, the quote. So he said, failure is not in falling down, okay? When you fall down while doing anything in your life, it is not your failure. So if you don't get success in your exams, it is not failure. Failure is not in falling down, failure is in not getting up again. Remember, okay? So falling down is not failure. Refusing to get up again is failure. So you never refuse to get up again, okay? Never refuse to get up. How many times, no matter how many times life brings in front of you all these challenges, all these failures, you have to get up again with new energy, utmost vigor. Remember, then you will not be a failure, okay? Yes. Okay, so this is the thing. Now talking about the conclusion part. Indian economy is navigating the challenges from an adverse global macroeconomic and financial environment. So we have some underlying challenges in macroeconomic and financial environment, but real GDP growth is robust on the back of solid investment demand. That is something satisfactory. So this solid investment demand is supported by healthy balance sheets of the bank. As we have seen, that banks and NBFCs are also performing good on the liquidity requirements, reserve requirements, right? Also on their profitability, we have seen the return on assets, return on interest, all these things, right? So this is the thing. Then government's focus on capital expenditure. You know, government is continuously trying to have fiscal consolidation as well as continue its capital outlay, expenditure on capital goods. So that is boosting investments in the economy. Next, prudent monetary, regulatory and fiscal policies. Of course. So all these are contributing to robust real GDP growth, which we are very satisfied about. NPA is being declining, current account deficit being declining, core inflation on a moderating trend, all these trends which we have discussed n number of times, right? The headline inflation also easing towards the target. It will increase consumption demand, especially in rural areas. See, RBI is trying to maintain the inflation level with higher interest rates. So once it gets moderated, that would boost up demands from the rural areas as well. They will be able to purchase these things, you know, food, fuel, everything which is there in the headline products. So from there also, if demand increases, that would add to aggregate demand. Then external sector's strength. We have a good external sector, we have a good trade relation and buffers in the form of foreign exchange. You know, India has the highest it has had in the history of foreign exchange reserves, right? And it will insulate domestic economy from global spillovers. So having these proper reserves make us immune to any risk. Having a robust banking system, financial system, proper liquidity to manage any unanticipated risk gives your economy an immunity. It is like an immunization program, right? So it gives you immunity against any international risk related to finance or economic crisis. But there are certain downside risks to the growth outlook and upside risk to the inflation. There are still certain risks which India should be very careful about. Geopolitical tensions, geo-economic fragmentation. There are certain economies in certain geographical pockets of world which are developing faster. We need to have equally distributed growth, okay? Global financial market volatility is there, you all know. International commodity price movements are there. That affects our price stability in our domestic market. Erratic weather developments, climate change. Climate change is still it will be a persistent challenge for every economy, not only for Indian economy, okay? This is what it says. Then, Indian economy would also have to navigate the medium-term challenges posed by rapid adoption of. Now, these challenges, if you talk about climate change and all these, they are, you know, long-term challenges. They will persist for a long period of time. But there are certain medium-term challenges which you should remember, highlighted by the report. You can write them into your answers. These are due to rapid adoption of new techniques. For example, AI. AI comes along with its challenges, right? So artificial intelligence, machine learning, it has challenges as well. We have to deal with that. Recurrent climate shocks. These are also medium-term as well as long-term challenges. Even so, it is well placed to step up its growth trajectory over the next decade in an environment of macroeconomic and financial stability so as to achieve its developmental aspirations by reaping its demographic dividend and exploiting its competitive advantages that have placed it as the fastest growing major economy of the world. So here the report is next saying, given all these challenges, we are very positive about India's growth outlook. We will capitalize upon demographic dividend. We have discussed what is demographic dividend. India has the highest population in the working age group. So we can reap upon it. We will reap up the benefits of the demographic dividend and we will be able to be on this path which has made us the fastest growing major economy of the world, right? So this what the report is all about. This was your report. We have completed this, right? We are done with the RBI report analysis. Congratulations to all of you for staying so tuned for a longer period of time, for staying focused. And remember, as I have told you, we have not taken unnecessary repetition. It is very lengthy document. In the later parts and sections and chapters, it has unnecessary repetition of what we have done in the part 1 only. So the most important thing is your part 1 classes. Okay. Also, we will have certain MCQs of this report so as to revise, so as to make your preparation more exam oriented. You will be able to revise all these concepts via your MCQs. Okay. Yes. I hope it was useful for you. I hope you enjoyed these classes, and just remember, revise these concepts. We have not left even a single concept which was there, which was not discussed for you, right? So remember all the concepts, remember the trends, and just revise them. Revision will only be the key. Otherwise, you will not be able to remember such a lengthier document. All right. Thank you so much for this. If you are able to understand the report, if you have enjoyed these classes, that's all. That's the most precious reward for me. Okay. Yeah, MCQs we will have very soon. Okay, we will have MCQs very soon. You need not worry about that. Just revise before we have MCQ series of the RBI report. Revise all these things which we have done. Be confident about that. You will be able to utilize this report in the most efficient manner, believe me, in your examination, right? That's all I can promise to you. So that is it for today. If you have any doubts, you can ask me. I'm waiting for any questions related to this report or today's class. Otherwise, I'll see you in the next editorial class, which is scheduled for 12 p.m. All right then. No doubts? Okay. Okay. Thank you so much. Thank you so much. Have a very great day. I'll see you in the next session. Thank you so much and all the best for this report. Just keep on revising and reading. Thank you.